Checkout shares of Zillow plunging to a 16-month low today after the company officially said it was exiting its home flipping business. The news prompting our next guest to cut its price target on the stock in half. Evercore Senior Managing Director and Head of Internet Research, Mark Mahaney, joins us now. Mark, great to have you with us. You wrote in your downgrade note that you basically saw the iBuying business as sort of a valuable option in Zillow's stock, a call option, obviously, not the opposite as we've seen here actually play out. And I'm wondering, to the extent that you saw Zillow growing by X% and reaching a, whatever it is valuation, if you strip out iBuying, what is that growth? What sort of valuation does it deserve given the ratcheted down growth expectations?
So it looks like the core business, what they call IMT, but really is kind of advertising for real estate professionals. We think that grows somewhere in this 10 to 20% range. It's low double-digit growth, 10 to 15%. There should be some margin expansion there. So you're talking about maybe a 15 to 20% EBITDA grower, over the next couple of years. That warrants a decent EBITDA multiple, low end, 15 times, high end, 20 times, somewhere in there. That's what we think the stock could be worth once we start to get through all the disappointment, because it's not just exiting an option. There's really a question mark about the effectiveness of management.
It's Karen. Thanks for coming on. When you look at this and you look at the balance sheet and, them getting out of the business, taking these big write-downs, though, and then you look at the valuation where the stock is now, do you think we're going to see a big buyback from them?
Oh, look, there's a lot of things they can do here. One of the things that was disappointing about this announcement was I didn't know what the backfill plan was. So that's plan A. That didn't work. That's fine. What's plan B? I think there are a lot of things they can do to kind of fill in, provide more services for home sellers. It's just that we didn't hear what those details were. So I think that'll come as a potential positive catalyst. Yes, they've got a lot of cash on the balance sheet. I think it's about $3.2 billion. Now, a lot of debt, too. But they're exiting what is a capital heavy business, a business that requires a lot of cash in order to handle all the home transactions. You got to put a lot of money at risk. So this does make it less risky, the balance sheet. And so therefore, you should, not immediately, but in the next year or two, you start seeing share repurchases. Yes.
Hey, Mark, it's Tim, and that's why EBITDA margin of the core IMT business actually goes higher, or the combined business, but now which is just IMT. So I kind of get the sense. For a company that told us they didn't really know how to assess the housing market over the next 6 to 9 months, people are concerned that they don't know how to assess the losses on the balance sheet from the iBuy business. Can you talk about this, again, as best you can assess? Because it seems to me the impairment charges here, the market's taken out a lot more than the 2 to 250 or 300 million that I'm reading is where a lot of the analyst community is. Do you think the market's doing more than that to the stock?
Yeah, so Tim, 2 points. First, because you teed it up, this is a high margin business. I mean, the core business, they're running at 40% plus EBITDA margins. There are very few companies I look at. I mean, Facebook, Google, that run at margins like that. So that's a good, healthy business. It generates a lot of cash flow. Frankly, as a growth investor, I'd like to see them take down those margins. You're not going to get any credit in the public markets after this kind of fiasco. You're not going to get any credit in the public markets probably for 6 or 9 months. So go invest aggressively in new initiatives. Come out of that. Make yourself a great 23 stock, acknowledging that you're probably not going to get much out of 22. So that's point one. And then, yeah, the market probably overreacted to the impairment of assets. I mean, the enterprise value in most people's business financial models, valuation models for the Zillow offers, I don't know, 10% of the entire equity value, maybe 20%, but not more than that. And you could see how much the stock has come. It probably got overbought at the beginning of this year, but to me, it's probably in that oversold territory. You can make a buy here on valuation. I think you want to wait and see what the plan B is. So what are you going to do now to offer something to home sellers?
Mark, I'm curious because at one point you thought this is a good idea, and you had just gone through how this is such a capital-intensive business, et cetera, and obviously predicting the housing market is a very difficult thing, and holding inventory on your books is not necessarily a good thing for what should be an internet business. And I'm wondering, as you look back, and obviously all of us can Monday morning quarterback on this, but what do you think you missed here? I mean, a lot of people missed it who were in the stock, obviously. So what do you think you overlooked here?
Well, so Melissa, the two questions, the single biggest question I asked myself, and I asked myself last night, is there a market here? Like, can you make money as an iBuyer, or is this problem idiosyncratic to Zillow? And my guess it's more the latter than the first. I don't cover Opendoor or OfferPad, but my guess is that, I've seen the iBuying market increasingly gain share in terms of total residential home sales. And I've seen those companies, at least Opendoor, generate some decent, profits. And so if they were better able to manage, 2 to 3 months out home prices and not get over ahead of their skis, there may well be a there. So then the mistake I made wouldn't have been on the market. The mistake I made would have been a little bit too much confidence in the ability of this management team, which was a great advertising revenue model, to kind of shift over into a transactions model. That was always a jump in terms of the competencies required. You got to know how to price houses. You got to know how to quickly renovate them and get back out in the market. It's a different set of skills. This company didn't have it.
The last quick question that I have, Mark, then is, are you confident in management to find other ways to continue to grow this business beyond its core IMT business, given the missteps it made?
Yeah, I think they can. I think you can. There are ways you can. There are diversification strategies just within advertising. By the way, this is a site that gets tons of traffic. It's so popular. SNL does a skit about them. So Zillow's got great brand name awareness, great brand awareness. There's probably more the company can do to monetize all that traffic.
Yeah, I mean, I think I check it at least twice a day myself. And I'm not even in the market for anything. Mark, thank you. Mark Mahaney of Evercore. All right, so I feel like we need to do a big reveal here. Who are the two traders who actually bought on today's big dip? Karen and Tim. So Karen, why don't you walk me through your trade?
Yeah, so I started, but you and I were speaking early this morning. I started this morning, put my toe in, and then by midday, my shin, and then I finished at the very, very end of the day, like knee high in this. I really like it. I think it's fantastic. I think that if you had told me June 30, when the stock was 120 something, they're going to get rid of the business that you hate, that asset-heavy one. They're going to take a big charge, not even that big, but a big charge to do it, and you're going to be able to buy the good business at $60-something a share. I would have said that's never going to happen, but here we are. That's happening. So I think it's great. I've shown that I'm impatient and can't do the 3-day rule. I did it with Ulta. I could have bought it better, but it ended up working out. I think that is what is going to happen here. I really like it. They're going to start to really try to, in the next quarters or two, make this a discontinued operation to highlight the rest of the business, how fantastic that margin is. You remember this morning we were talking about, we had Steve Eisman on. He didn't like Zillow for just that reason of this asset-heavy business. I spoke to him this morning, said, what do you think? He said, I think it's a great business. They're out of that other one. This is a buy here. He said, and you can quote me on that, just so I know.
And there it is.
Turn. But I like it, and I'm going to be buying it tomorrow.
Yeah. Tim.
As I saw Karen's toes floating down the stream, I started nibbling too. I mean, as far as I'm concerned, and I've done it via options, and therefore, as we always say, I think I can measure my downside. But and on a big down day, sometimes the volatility plays in your favor if you're buying calls or a call spread. And so, to me, I just see a core business, the IMT business that Mark talked about. The business that I see and know is low 50s to mid 50s EBITDA margins, growing at high single digits, low double digits. And I think it's a case where a lot of bad news. We have to get a little more clarity here. But I think this is a relief to a lot of investors. Look, the stock's been torched. And it's been torched like there's something more we don't know, is my view today on the kind of move that we saw and even the move we've seen recently. And I think that's overdone.
Guy, real quick, because we've got negative time. Have we seen the lows for Zillow?
Traded 15 million shares today. 75 million. That's 15 times normal volume. Everything that happened was addressed at the Sohn conference. So a lot of people, I think, knew this was going to happen. And stock was 107, if you recall, on October 27th after they talked about it on our show. So I think for a capitulatory bottom, this is as good as it gets.